The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. As we navigate 2025, the global economy faces a mix of easing trade tensions, moderating growth, and shifting monetary policies. Asia, as a dynamic and diverse region, sits at the crossroads of these changes, with both challenges to overcome and emerging opportunities to seize. So what is the current macro environment? What are the emerging trends shaping Asia's investment landscape? And what are the key themes that investors should watch closely in 2025 and beyond? Well, to find out more, joining me now is Laura Cooper, who's the head of macro credit and global investment strategies at Nuveen. Hi, Laura. Welcome to the show.
Thank you so much for having me.
Thank you so much for joining us. Well, Laura, the global economy this year is shaped by easing trade tensions, slowing growth in Asia, and shifts in monetary policy. So how would you summarize the current global macroeconomic environment, and what key factors are influencing Asia specifically?
So I think the key factors that we're watching for on the global front really emanate from the trade tensions that we are seeing, as well as geopolitics and the developments that are occurring there, and then the subsequent effects those are potentially having, largely in terms of inflation. And we think, given the tariff backdrop, we're likely to see higher inflation in the U.S., but potentially softer inflation pressures elsewhere. And that is going to dictate different policy paths for central banks. And at the same time, because of this heightened uncertainty in the global economy, we are going to see greater bouts of volatility in financial markets. And I think that does open up key opportunities, particularly for Asia investors looking not only to have exposure in the U.S., but elsewhere in the global economy.
Okay. Asian growth is moderating with challenges in exports and manufacturing sectors. So what are the main headwinds facing Asian economies today then, and which markets or sectors are most vulnerable?
Well, I think at this juncture, what we're seeing in terms of the headwinds for Asia largely emanate from the risks that are coming from the U.S., because the global risks are really being driven by the U.S. And what comes to mind is around the uncertainty around trade. We have seen some trade deals come through, whether that's in terms of Japan or elsewhere like Vietnam, but we have really yet to see defined details on what the trade backdrop will look like between U.S. and China. And so that lack of clarity does really bring about this uncertainty for what the global outlook could be, and particularly the spillover effects it has on these Asian economies. So for China in particular, we do expect a much weaker growth outlook from here, whereas others like Japan, we actually remain quite constructive. Even though growth is still subdued, we are seeing inflationary pressures, and that translates to what we think will be the Bank of Japan hiking rates. So I think this backdrop really does offer potential opportunities for Asian investors.
Well, conversely then, which Asian economies or industries are showing resilience or growth potential despite these challenges, Laura?
Well, I think where we are seeing opportunities in terms of the sector basis is really ones that are tilted more towards long-term structural themes. So if we think around artificial intelligence, we're seeing just an insatiable AI demand that's colliding with capacity constraints, and that has propelled not only tech stocks in the U.S. to record highs and driven equity benchmarks higher, but China tech, for example, is one where we think is showing a great degree of innovation. It is still relatively cheap. And so those kind of long-term tailwinds should be supportive for that. As well as we think elsewhere in the region, Japan, as I mentioned, is quite attractive, particularly in an environment where the central bank will be raising interest rates. Domestic tilted equities around banks, we think is again another quite attractive opportunity. And we are seeing Japanese equities trade at record highs, but we think there's even further upside from there. And then, as I mentioned, this potential inflationary backdrop, there are alternative assets I think that investors can delve into as well.
Right. Well, meanwhile, central banks in Asia are expected to ease monetary policy to support growth. How are the anticipated interest rate cuts across Asian central banks then likely to influence market performance and capital flows in the region?
Well, it's one of the reasons why our strongest conviction investment view in recent months has been around emerging market debt. And, this encompasses quite a number of Asian economies as well. And we've seen emerging market debt strongly outperform already this year. This has been abetted by the tailwind that is the weaker dollar, which we do expect to persist. And as we see inflation be relatively contained across Asian economies and these central banks, to your point, cut rates further, that will actually provide even more support for the backdrop of emerging market debt. So that's really an opportunity that we see in this backdrop where central banks are poised to ease further.
Right. And digital transformation, green energy, and the regional trade agreements are key evolving trends here. So, which structural trends or technological shifts do you think will be the biggest drivers of economic and investment opportunities in Asia over the next few years?
I think it's what we're seeing in Asia as well as elsewhere. It's really just this demand for artificial intelligence. And that's not necessarily just in those kind of magnificent 7 stocks in the U.S., but we will expect to see kind of second order effects to different sectors as well. And it's about finding those opportunities where perhaps it's not yet priced in. So we are seeing very stretched valuations in those U.S. tech stocks. But if we can think about what are those non-tech sectors poised to benefit from spillovers, one area where we are seeing opportunities is actually in the utility sector, because this is going to benefit from the increase in energy demand. It's expected to rise globally about 30% over the next 15 years. If you think about data centers, just the robust energy demand resulting from the energy transition. So I think really we're pinning our investment proposition in the long term on these artificial intelligence trends.
Right. And how are regional trade agreements and geopolitical shifts as well influencing investment strategies here in Asia?
Well, I think when it comes down to investors are facing just this cloud of uncertainty, and that does have a degree of caution. But I think overall, we are starting to see some incremental signs of clarity come through in the trade backdrop. Predominantly when we think about the Japan-U.S. deal, yes, there are details that still need to be ironed out, but the fact that we did have that deal does kind of provide a little bit more opportunities for investors to take on some more tactical exposures, because there is really eliminating this tail risk that we could see a kind of a full-blown global trade war, in which case we would expect to see corporates come under more severe pressure given the growth and inflation challenges that would bring about.
Right. I mean, speaking of uncertainty here, investors usually seek actionable themes during this time of uncertainty. So what are your top investment convictions in Asia right now? Are there particular sectors or asset classes you find especially attractive?
I think there are a number of opportunities just given this backdrop of elevated volatility. If we think about the equity space, global equities are actually quite attractive. We've seen investors rotate away from the U.S. due to stretched valuations, and markets like Europe, like Japan, that we are seeing more of that growth impulse are attractive, as well as I mentioned, emerging market debt, those kind of key tailwinds coming through. And then on the alternative side, we can think about infrastructure is an inflation hedge, but it's going to be supported by some of those long-term AI themes as we see greater investment in kind of AI data centers, for example. And then a final one is around real estate. We saw global real estate values have fallen for about 9 consecutive quarters up until late last year. That was a significant reset. Now what we're seeing is that we are seeing an uplift in real estate. And we think real estate does deliver this income resilience and diversification. So not just equities and fixed income, but looking outside of that traditional allocation as well in portfolios.
Interesting. Well then, Laura, how should investors balance risk and reward when looking in Asia's markets today?
I think it's about taking a bit of a barbell approach. So you want to take on, potentially more volatile type of exposures. We can think about, in equities, U.S. large caps driven by tech earnings continues to be one that we do favor, but it is vulnerable to downside as we see, one particular earnings miss by a company because of the concentration risk there. But it's hard not to be invested in those structural growers, so you have to have some allocation there. but then balancing that with income exposures in terms of fixed income. Given where yields are now, it's quite attractive. And I think you can kind of clip the coupon in some of the fixed income space without taking on a lot of the credit risk. So it really is an appealing backdrop to find that balance amid this world of heightened uncertainty.
Definitely. I mean, trade disputes, geopolitical tensions, and global demand fluctuations, they remain risks. So, Laura, what are the biggest risks or so-called unknowns investors should keep an eye on that could derail Asia's economic momentum?
I think the ones that come to mind, certainly when we debate this with the team over at Nuveen, is the first is around inflation. I mean, it's one of the reasons why the U.S. Federal Reserve has yet to cut their interest rates this year, because they are concerned about the potential for tariffs to drive price pressures further. And we think that if we start to see those pressures come through, perhaps the Fed won't be in a position to cut rates this year. Now, that's not our base case, but because markets are really pinning their hopes on the resumption of the easing cycle, I think that could certainly disrupt risk. The second factor is around what we're seeing in terms of U.S. policy uncertainty and whether we will start to see a greater erosion of institutional credibility in the U.S. that could have investors further rotating away from U.S. assets. And then I think the third key risk is really around the geopolitical backdrop. Markets are anticipating we will get a peace deal between Russia and the U.S. around Ukraine. We are seeing kind of overall tensions ease from earlier this year, but a further escalation would certainly be a risk-off event to watch for.
All right. Well, then in this evolving environment, what advice would you give investors on portfolio diversification and managing volatility in Asia-focused investments?
Well, I think when it comes to managing volatility, it's about staying invested for the long term. It's not about kind of chasing a lot of these sell-offs and rallies because of the uncertainty around policy, around trade, around geopolitics, all of the points you mentioned, we do expect to see greater volatility, more drawdowns, more record highs. And against that, it's about staying invested. We see equities over the medium term, do tend to generate positive returns. This is a great environment for fixed income opportunities. Despite credit spreads remaining tight, you get attractive yields. So it's about kind of looking through the noise and really just staying invested.
Some great advice there. Well, before we let you go here, Laura, how do you see Asia's role in the global economy evolving beyond 2025 then? I mean, what should investors keep in mind for the longer term?
Well, I think we're going to see those key kind of long-term structural trends play out. So, for example, the diversification of exports away from the U.S. to other markets. So we're already seeing that in terms of the China trade data. We do expect that reorientation of supply chains to persist. Perhaps you're going to be in a higher tariff environment that's going to, make some onshoring trends. And then as well, if we think about the global economy, we're going to see higher defense spending come through, and that will have ripple effects for Asian economies as well. So I think we are in a different regime than we certainly have been over the past 4 decades or so, where Asia is likely to play a more prominent role against this backdrop of AI as a kind of the key driver, I would say, of growth and productivity going forward.
Some great insights from you there. Thank you so much, Laura, for joining me today.
Thank you so much for having me.
Thank you. That was Laura Cooper, Head of Macro Credit and Global Investment Strategist at Nuveen. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.